What's Saturday in that on earth? Thanks a lot. Okay. All right. So listen, we're going to it's about a little after 1 o'clock. I'm going to get started. We'll get through some of the boilerplate stuff. We still got an awful lot of people logging in, and I really appreciate you folks taking time on a Saturday to watch the webinar. All right. So we're getting started again. We're going to be talking about the SPY Super System software and how I use that to identify when institutions are in trades and when they're not. I do this in my options live trading room all day, every day. I trade there every day. I start about 9:15, about 15 minutes before the market opens, and till market close each day, 5 days a week. And I don't know too many options trading rooms that there's somebody there all day long. And then I have a text alert service where we take the very highest probability trades that we can find that are going to last for a period of time. I'm not going to put a text out on an alert on text alert out on a trade that I think is going to last 20 minutes or half an hour. So that's what the two rooms that I have for the trading room and the alert service. So we'll talk about that. And first thing I've got to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Larry, can the system be used on another platform besides Thinkorswim? The software itself, the SPY Super System software, works on Thinkorswim or Ninja. It can go on Ninja or Thinkorswim. Now you don't have to trade off of Thinkorswim. I do not trade off of Thinkorswim. I just use Thinkorswim for the SPY Super System software. Okay, snowstorm in Wisconsin, Robin. Well, I'm in South Carolina. It's 78 and sunny today. This is really a warm spell for us. All right, so let's get going. If you have any questions during the webinar, just first of all post them in the question box. If I can't answer them, I will. Then you would, if you put your name and phone number in the chat box or in the question box, or Rory from Right Line will call you back. He just call you one time just to answer any questions you have that I can't answer. And here's his phone number here, and I'll post this at the end. But I'll keep the question box open in case people have questions along the way. Can Canadians use the system? If I don't think Thinkorswim is available, I'm not sure if Schwab is putting that up there in Canada or not. But you can put it on Ninja. I'm relatively confident Ninja can be used there, and you can use it on Ninja just like you can use it on Thinkorswim. Okay, Robin, 24 degrees there. I envy you. All right, so this is just kind of a graphic talking about the SPY Super System. I want to emphasize the SPY Super System is the method of it. What it uses, it tracks institutional money flow. It finds it is probably the most accurate that I find from being able to identify if institutions are in trades and if they're not. And that's one of the criteria that you need to use to trade successfully, is to be following the institutions and basically not getting into trades that the institutions aren't in. And that's what it's helped me a lot. It actually increased my win rate when I went to the SPY Super System from trading with normal indicators. I went from about an 82% win rate up to about 88%. Chris, can this software be used futures on, say, NQ? Absolutely. NQ, ES, RTY, Russell, yeah, and can use it on any of the futures. You can also use it in any commodities if you want to trade gold, oil, anything like that. It'll work on all of those. The indicators are the indicators. I mean, the information is the information. It's going to be calculated based on whatever particular product that you're looking at. Okay, this is just kind of a graphic of the Compass system, the Compass alert service. It's now called the SPY Super System, but it's the SPY Super System is basically a modification to the Compass system to add things like different kind of scanners, some different indicators. But the Compass system was where it comes from, and it's called the SPY Super System. This is the text alert service. Basically, you get a text alert on your phone through an SMS text alert. I have it on my phone, so I can make sure that the texts are going out on a timely basis. It takes me typically about 15 seconds, 10 to 15 seconds to get the alert once I've sent it out. Chris, will it work on a 1 minute time frame? Is there a time frame that's recommended? 5-minute bars. I use 5-minute bars, Chris. It'll work on 1 minute. The question is, is that effective? To me, that's a scalping methodology when you're trading 1 minute or less, or you're trading tick charts. I don't use that, but I mean the indicators will work, but I don't use them on. Some people do go down to 2 minutes, but I use 5 minutes and I use daily. That's the ones I'm going to be showing today is 5 minutes and daily. But you know, if you prefer to work on a 15-minute time frame or an hourly time frame, they'll work there too. Okay. First thing I want to cover, and I cover this in every webinar. So if you've listened to a webinar before, this is going to be some. There's going to be some repetition here. But a lot of people don't understand this, and this is really important. It's important to understand what moves the market. The market moves. Well, there's two types of people trading in the market. There's the retail traders such as me and most likely everybody else here. And these are the retail traders, marbles. That's us. We're little marbles. These should be tiny little marbles. It's important to understand where the retail traders. These are the institutions, and I'll get into those in just a minute. But if the institutions are not in any big way into a particular trade, and we're just trading against other retail traders, all you're going to do is get a lot of chop and a lot of chaos. I mean, basically the market just chops around. Institutions, once they get into the trades, that makes a big difference. This is where the movement in markets come from, and the trends come from. Daily trends, 5-minute trends, they all come from institutions. Now, institutions are typically made up, and most everybody knows investment banks are part of the institutions, which would be Goldman Sachs, JP Morgan Chase, Wells Fargo. All of these are institutions, and they're big players in the market, and they have trading desks where they actually have humans that are in there trading. But most of their volume comes from what are called algos, which are computerized programs that trade, and they trade on basic setups that they've programmed to identify. And one of the things that's happened over the last several years is the algos in the institutions basically have written programs that can identify retail traders trading off of some kind of known strategies, like MACD crossovers or RSIs or something like that. And they can write a program. They write a program to actually create the crossover and then reverse it and try to trap retail traders. So it's just important to understand that we need to know what's going on here with the institutions. And when the institutions do something like do an algo, when an institution does that, it won't be all the institutions that are doing that. So it's not going to show up in our information as institutions coming into the trade, because it's only just one or two or a few. We're just looking for movements in institutions that are being pushed by a majority, a huge amount. And that's because the institutions or the investment banks are also not the only things that make up institutions. Hedge funds make up institutions. Hedge funds, there's hundreds of hedge funds. Hedge funds have trillions of dollars, billions and billions of dollars to invest and trade, and they're also part of the institutions. A third thing would be pension funds. Pension funds for state workers and firemen and policemen. All of these big pension funds also have huge amounts of money to trade and invest. So they're part of the institutions. And lastly, there would be mutual funds, such as T. Rowe Price, Vanguard, all the big mutual funds, huge amounts of money that they're also putting into the market. So what we're looking for with the SPY super system was identify when there's enough of a disparity as far as money coming into the market that we can identify it, that it's institutions that are pushing a particular move and not just retail traders. And that's what we're looking for. All right, so that's what makes the difference. That's how you become successful and consistent, is to trade when the institutions are trading. Now in the room, and what's that question? Is the win rate higher than the money flow tracker system? Money flow tracker system, Chris, is pretty similar to the SPY super system, except it's on Ninja, so it looks a little bit different. And I've not traded it on Ninja, so I don't know, but the information should be very, very similar as far as how it's constructed. Typically, Ninja is most people on Ninja trade futures. I mean, that's kind of the calling card for Ninja, is trading futures because the commissions are so low on Ninja, much lower than they are in some of the other platforms. But the information you're getting from the money flow tracker, it is coming off of the SPY super system type of indicators, yes. Okay, so we have a couple of rules to trade by in the room and on the alert service, of course. We trade the best and skip the rest. And it's a very simple statement. It sounds really easy. It's not that easy, but it's important to keep this in the forefront of your mind. We want to trade the best, which one of the things the best is when the institutions are in there. Okay, Robin, Ninja will soon be offering single stock trading. Yeah, I assume. I mean, you can trade stocks off of Ninja. You can actually link to some other platforms to do that. I don't see the point to it if you're going to trade stocks though, because I trade with Tradier and I don't pay any commission. I just pay a flat fee of $10 a month, and I get to trade all the options and all the stocks that I want with no commissions. And to me, that's a huge advantage. All right, so trade the best, skip the rest. And this is important. Our objective is not to make trades. Our objective is to make money. This is basically meant to keep people reined in from over trading. One of the biggest drawbacks to retail traders, and one of the reasons that they mostly lose money, is they overtrade. I mean, they just trade too many things, too many trades a day, too many trades a week. They get anxious when they're sitting at their computer. They haven't put a trade in. They decide they got to go ahead and make a trade. So they'll find something. It may not be the best, but they want to be trading. So our objective is not to make trades. Our objective is to make money. I emphasize this in the room every single day. All right, and then maintaining discipline is really important. Now, when I say maintain discipline, what I'm talking about is to have a methodology, a strategy that you know has been proven to work, and to stick to that strategy or strategies. We have several strategies because you have to have multiple strategies to trade depending upon what the market conditions are. But you've got to be able to maintain discipline and not be jumping around from tried strategies that work to untried strategies because somebody told you this other strategy is a really good strategy. You've never proven it, you don't know that, but you go ahead and do it. All the strategies that I use, I've traded live. I don't do back testing, I just trade live. And I determine through several hundred trades whether a particular strategy works or not. I'm always working on new ones to see if there's anything that's better than what we've got, but I don't even talk about it until I've put in enough trades to make a judgment on it based on the results. So maintain discipline. Stick with the strategy you know works, and don't stray from those. And remain patient. These two go together because maintaining discipline means you have to stay patient. You've got to be able to wait for your setups to come. So these are the two very, very critical things. Most retail traders don't maintain discipline. They'll take, for example, a strategy, and when they take a strategy, they'll give it a couple of weeks, and they run into a spell of 2 or 3 losing trades, and they say, well, this isn't working. I'm going to go to something else. They jump onto another strategy that works for a while, then that stops working, and they jump to something else. And this is what they do. They go from strategy to strategy to strategy until they finally give up or blow up their accounts because they just cannot maintain discipline. And remaining patient is the most key thing. In the room, I know people get frustrated with me when yesterday I said this is not a day for trading. The market was choppy. It was flipping back and forth. There was all kinds of flushes on red candles and then bouncing back again. So don't be jumping into market conditions that are that choppy. So you just have to kind of sit on your hands and not trade. Now there were some intraday trades we could take, but there was no swing trade set up for the most part yesterday. So that's important. And like I said, people get frustrated with me because they're looking for trades. Sometimes not trading is the very best trade that you can do. Is the system suitable for prop accounts? Yeah, I mean, it's going to work for prop accounts like any account. It depends on what prop company you're using and what their criteria is for the trading that you should do. But yeah, I mean, of course, any strategy that works is going to be good for prop accounts. Okay, so as a profitable trader, we need an edge. We need an edge over other retail traders because that's what we're trading against. We're not trading against institutions. We're going to trade with institutions. We're not going to beat institutions. So that's a misnomer. You're not. You're going to take your money from other retail traders. Basically, this is a a war that you're fighting every day with other retail traders. And if you've got better information, better methodologies, and better control over your emotions than they do, you're going to take money from them. Another question, do I usually swing trade or day trade? I do both, Vinod. I mean, it's important. I don't have a lot of swing trades on right now because the market conditions are terrible. We've been chopping around here for a month and a half, going up and down, up and down, up and down, no really good trend. So we're doing a lot of intraday trading right now, and I'm also trading a lot of intraday index trades, what we call the SPY super system methodology, where I trade the SPY, the Qs, and the IWM, or the deep Dow, and you can do it on futures. But those are very quick trades during the day, so I'm doing a lot of that. Not a lot of swing trades until we get better market conditions. All right, so our edges as profitable trader. Again, we have the right line compass, or the SPY super system. This is now the right SPY super system. It's an enhanced version of the compass system. That gives us an edge because it tells us if institutions are in there. We trade relative strength and relative weakness. And when we're trading a stock or even an index, we're looking to trade something that's relatively strong if we're going long. We want a stock that's outperforming the SPY. If the SPY is moving sideways and down, and you've got a stock that's stacking green candles, it has relative strength. So that stock's going to give you an edge to the upside. And if the market's going sideways and up, and you have a stock that's stacking red candles, that's relative weakness. This is really important. If you're trading stocks, you want to be trading stocks that are relatively strong or relatively weak to the market, because it's going to protect you. If the market reverses and starts to go against your trade, then it's not gonna go against you as quickly as the market is. We trade with the market trend if we can identify a market trend. Yesterday there was basically no market trend, very choppy. But if there is a market trend, if we get a bullish day, the market's trending up, we want to go long. We want to basically try to let the market give us a tailwind. And the last thing is to buy near support and sell near resistance. And this is really important. This is try to keep traders away from chasing stocks that are moving up really quickly or moving down really quickly. Once they get too far extended, then you don't want to be trying to jump into them. Wait till they come back. Most stocks will come back toward a support or resistance level if you give them time. So there is no reason to jump in there except for FOMO, fear of missing out. And this is fear of missing out is an emotion. All right, that's you're trading off an emotion when you're trading off a fear of missing out, and we don't want to be trading emotionally. I say it all the time that the trading is not supposed to be like an amusement park. It's not like going to Six Flags and riding roller coasters. You don't want to be trading off adrenaline or trading off of depression. You don't want to be disgusted and trying to trade and or elated in trying to trade, because it's going to completely mess up your trading. And by doing this, by buying your support and selling the resistance, you're forcing yourself to get in where you should and get out where you should. All right, the compass system, or now called the SPY super system, it identifies the highest probability setups, or sidestepping setups that look good, but will fail more often than they succeed. And this is really important. This is telling you we're identifying when institutions are in the trades and when they're not. Again, it does this identifying when institutions are driving the move and when they're not. So we're joining we're basically piggybacking on the institutions, or picking up their breadcrumbs, if you want to look at it like that. The SPY super system software, used to call Compass, it analyzes complex trading data and displays the results in an easily identifiable visual format. And this is really important, because to be able to identify whether institutions are in the trade without going through 15 different indicators to try to find it, if you can see it on the chart just by basically visually looking at colors, it's going to make it much easier to identify it and to trade it. And it also makes it much easier for new traders to be able to pick up on using the highest methodologies, trading setups, than it would be if they didn't have this. It's going to help new traders become better traders quicker. And again, how do we get an edge over the other retail traders? We're only taking trades that are being driven by institutions. Most retail traders have no idea if the institutions are driving a trade or not. We trade stocks that have relative strength or relative weakness. Most retail traders don't trade. They don't even know about trying to use relative strength or relative weakness. So again, that's important. And then we trade in the direction of the overall market. If you're doing these three things, you're better than 95% of the retail traders that are out there. I mean, listen, there's millions of retail traders that come and go into the market all the time. Most of them end up losing money because they have no idea what they're doing. If you've got the they're coming into the market with a pea shooter, and you're sitting there with bazookas and tanks, believe me, you're going to take their money. Again, it gives us an edge, as our trades will be supported by institutional buying and selling. They'll be outperforming the SPY or the Qs, and they'll be moving in the direction of the market. So there's our edge right there. Robin, you trade off divergence all day. Yeah, that's very nice. That's why I'll be talking about divergences. We have some divergence methodologies we use for swing trades. But I mean, what you're doing is you're trading a stock that's I'm not sure what you consider divergence, but not indicated divergence, I suspect, but stock price divergence. Okay, so that's what gives us our edge. Now, for finding basic high probability trading setups, this is what I call my setup funnel, a high probability trade setup funnel. This is basically virtual. This is the kind of thought process I go through when I'm looking to take a trade. And the first thing I emphasize now, this is not for scalping, and this is not for trading our SPY super system strategy for the indexes that we're just trading off of 5-minute candles for 2, 3, 4 candles. But for any other trades that you're going to take that are expected to be what would be considered a short-term swing, which sometimes to me is if you get in at 10 o'clock in the morning and get out at 3 o'clock in the afternoon, that's a short-term swing. Anything that's going to last a few hours or more to overnight to 3 weeks, you want to look at your daily chart first. Make sure when you go long that your daily chart is bullish. Make sure when you go short, your daily chart is bearish. All right, you don't want to be trading against the daily chart. It's obviously a couple of reasons. First thing is if you get into a stock long, you love the 5-minute chart, you get into it long, and then the daily chart is bearish. Once it reverses on you and you get underwater on that, on the 5-minute chart, you can't really stay in the trade. You don't have a daily chart to keep you anchored to that trade. If it goes against you and the daily chart is still bullish, you can certainly consider holding it the rest of the day and holding it overnight as long as the daily chart stays bullish. All right, so you can hold, and that's always going to happen. You're going to have some stocks go against you. You want to make sure you have a daily chart to back it up, and then you use the 5-minute chart to find an alignment for a good entry into the trade. All right, you're going to obviously want to trade with the trend of both the stock and the market. That's obvious. The third thing here is the compass indicators, or the SPY super system indicators. These need to be aligned. If you're going long, you've got to know on the daily chart that the institutions are in the trade, and that means the SPY super system has to indicate that that's what the setup is right now. And then we look for relative strength and relative weakness, and then we look to try to get into the trade near to support or near resistance. If it's not close to support or resistance, usually what I do is I just put an alert at support or resistance to let me know when this stock gets to that level, and then I'll look at it again and see if I want to take it. All right, so when you go through this checklist as the stocks meet these criteria, you're going to get several of them out of the bottom, and then you're going to take a look at other technicals to see which is the best to take. How close are they to support? How close are they to resistance? How much room do you have to the upside to a long? Is there enough upside to justify the trade? All right, so again, this is just the funnel method we just talked about. This is just written out so you can see it. Again, identify the market trend for the day if there is one, trade in that direction. Stocks to be traded should have a daily and 5-minute chart aligned. We talked about this is important. And the compass indicators, the SPY super system indicators, must align in the direction of the trade. This is critical. This tells us that the institutions are also in that trade as well. Namra, this is being shared. Yes, it is. You're going to get it. There'll be a recording. You'll get it. If you subscribed, signed up for the webinar, you will get a recording. Again, stocks should have relative strength and relative weakness. The rest of these we just covered. One thing I will mention on the 5-minute chart, you should always have your VWAP, or your volume weighted average price on there. That's an indicator that the institutions all use. You don't want to be trading a stock long if the price was below the VWAP. You want to wait for it to get above the VWAP, and vice versa on the short side. Very important level on a 5-minute chart. This does not apply to the daily chart. It applies to the 5-minute chart. Okay, and have patience. I put this down a lot. Try to have patience. Now in the trading room, in the options room, and the alert service, these are the strategies that I use, that we use. These are the ones that you would see. Okay, good. You're gonna leave, Mike. You're gonna get the recording. No problem. That's fine. So the strategies we use in the room, straight calls and puts, obviously. These are the most common thing we'll take, calls and straight calls and puts. I use debit spreads. Using weekly options expiration, which means if I'm doing a debit spread on Monday or Tuesday, my expiration date on that debit spread is going to be this coming Friday. I don't go out multiple weeks to do debit spreads. This has got a much better ROI than going out further in time for debit spreads. And I have videos, by the way, on all these strategies that we take. I have videos that go through how we make money, what the setup should be, when you should take them. We do what's called time spreads over earnings. This is a calendar spread. We do this to capture the volatility crush when earnings comes out. This is a non-directional trade. We don't care what direction the stock goes in. It's basically meant to capture the extra premium that's been pumped into the options by the market makers prior to earnings coming out. When the earnings come out, then that volatility comes out of the options, and we then want to try to capture the volatility crush. Again, I have a video on that. We use what's called a weekly ATM strategy. We just wrapped one up here on Bank of America just this past week. This is a strategy where we take a neutral to bullish stock and we sell puts, weekly puts against it every single week. We just sell puts at the money, and then we keep a longer dated long put further out in time, like 4 to 6 to 8 weeks out in time. We'll buy a put at a lower strike price to protect that trade. So if the stock turns against us, we can profit from the long put by closing out the short put and still having room for it to go in our favor. And again, we just do this week after week after week. As I said, we just closed Bank of America for a really nice profit on a weekly ATM. But all of these strategies need to have a specific stock. The structure needs to be good. The technicals need to be good, and the market needs to be working in your favor. And then we do credit spreads to capture premium over a few weeks. Now, the one strategy I'm going to talk about here a little bit is the SPY super system. This is a methodology for very high probability trades. This we use on the SPY, the Qs, and the IWM. You can use it on the NQ. You can use it on the futures. You can use it on the diamonds, whatever you want, but one of the indexes. And this is a very high probability trade setups that we use, but they're very quick trades. These trades are trading off a 5-minute bar, and you may only be in this for 1, 2, maybe 6 bars if you're lucky, if you get a nice trend. But I'm going to go over this. This allows us to take several trades during the day for people who are hampered by trying to overtrade. But this is had been very profitable for us. And in choppy markets where you can't take a lot of swing trades, this is a really nice strategy to use, which has been worked really, really well. And I'll cover the results on this kind of thing, on this particular strategy. All right, now the alert service itself, in case you're interested in the alert service, it's designed for day trades and short-term swing trades. We're not talking about investments here. Most of the trades you get are going to close out that day or within a few days. Sometimes they'll go up 2 to 3 weeks, but generally they'll close that day or within a few days. Now, it's important to understand that if you're a trader who is under pattern day trader rules, in other words, you don't have enough money in your account or you don't have a cash account, so you can't make more than 3 day trades a week in 5-day period, then this becomes difficult. But it's important to understand that all the trades that I post and send alerts out on have a daily chart that's bullish, which means if I'm exiting the trade during the day and you can't, because you can't get out of that trade because you can't make another day trade until the next day, you can hold it overnight with fairly high confidence that it's going to be good, because I took the trade based on the daily chart, which means the daily chart is bullish, which means holding it overnight is probably a relatively safe trade. I mean, it's obviously they can go against you, but you can still take the trade. Again, it's designed for traders who can't watch the market all day. The real-time alerts, they're going to be in the highest probability trade setups. Highest probability trade setups are done by identifying institutional involvement. I just keep saying this. We're only getting in trades the institutions are in. I do look at market internals to determine the overall market direction that day. looking at things like cumulative volume index on stocks that are moving up versus stocks that are moving down, and then we do some more detailed technical analysis on the setup. All right, so that's what comes to the alert service. This is an equity curve from the alert service. I need to put a new one together. This is one from March 2023 to June 24. This is the alert service. This is based on putting $2,000 into each trade that came out on the alert. You can show what the equity curve is. It's pretty nice, and if I take another year, it's going to look exactly the same. You'll see the results from year to year are pretty close on the trading. All right, now we're going to talk now about Heiken-Ashi candles. Do I use a stop loss in case you're not monitoring your PC? What I'm going to do, and what I normally do is I'll send a profit target out once I've determined the price movement. I may send an alert out, in the morning, and you may not get another alert till later that day or the next day or 2 days later to sell it. Whether if it's a profit or a loss. I don't put stop losses on. I only, you can put stop losses on. I don't use stop losses. I find that a lot of times you put a stop loss in, that what's going to happen is that the stock will, let's say you get a long and it flushes down and it'll bounce right back up again. So I wait, if I'm on a swing trade, I wait till the end of the day to see if the thing is breaking down. If it breaks down, then I'll put out an alert to take the loss on it. Okay, so we're going to talk about Heiken-Ashi candles. I'm going to go through, first thing is, this is using Heiken-Ashi candles, using the SPY super system. Just to kind of show you what Heiken-Ashi candles look like, and then I'm going to go into some detail about how to use them. But I just want to, if you've not used them before, this is what they look like. These are Heiken-Ashi, they're called Heiken-Ashi candles. Now you notice that in this particular case here, notice there's no upper shadow and no wick on the top of these candles. These are bearish Heiken-Ashi candles. Bearish Heiken-Ashi candles have flat tops like that. See the flat tops all the way down? Another interesting thing about Heiken-Ashi candles is the open of the new candle always starts at the halfway point of the previous candle. Right? Heiken-Ashi candles are made up of two candles. That's why that happens. But these are bearish candles here. Now you notice you're coming down and you get flat top, flat top, flat top. This is a nice bearish trend. You're looking at that. You can see the trend very easily. Right now you start getting smaller candles, and you start to get little wicks on the candle, and then you come down and you get another flat top. This is a continuation. Now you're getting all these wicks and tails. So if you're in this short, you're getting ready to get out of the trade here when you start to see this kind of action, right? There's wicks and tails, wicks and tails, wicks and tails. Now, if you go to a flat bottom candle like this, right? That's a bullish candle. That's a bullish Heiken-Ashi candle. Bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops, right? So this is a reversal. This is a Heiken-Ashi bullish reversal. We're coming from a downtrend to going into an uptrend right here on a flat bottom candle. Then we get another flat bottom candle. Then we start to get wavering again, all right? So if we went long here, we've got to be cautious. And as soon as we start to see this, we're out, all right? And now we're going back over again. Notice we're getting wicks and tails, wicks and tails. These are basically Heiken-Ashi dojis. Then we get a flat top. That's another reversal to the downside. Continues down, and then you get another green candle, and here's your Heiken-Ashi reversal back to the upside again, which goes into a nice trend. You can see the flat bottoms all the way up. All right, so those are what Heiken-Ashi candles look like. I'm going to show you them on real charts, but just so you understand, this is the important aspect of Heiken-Ashi candles. The flat tops for bearish, the flat bottoms for bullish. All right, so Heiken-Ashi, if you've not used these things before, all right, Heiken-Ashi candles, if you haven't used them, I think you're going to find them very useful in your technical analysis. What they mean is average bar in Japanese. They use 2 bars to create a Heiken-Ashi candle. It smooths out the price action so you can identify the trends, and the reversals is much clearer, since they eliminate a lot of noise, okay, and make it easy to see the trends. Now, one of the things I'm going to talk about here is why Heiken-Ashi candles are better than using regular candles to get into a trade. When you're looking to get into a trade, let's say a stock comes down looks like it's bottoming out and bouncing off a support level. If you use a Heiken-Ashi candle, once you've got a bullish Heiken-Ashi candle after a bearish trend, you've got a confirmation that that reversal is confirmed. If you're trying to do it with regular candles, it takes more time and they can be more choppy, but the Heiken-Ashi candle will identify the reversal in the trend, which is what you're looking for to get into this. So again, bullish candles have flat bottoms, as we just talked about. Bearish Heiken-Ashi candles have flat tops. Bullish trends will have flat bottom candles one after another. Okay, and bearish trends will have flat top candles one after another. And again, generally you can stay with a bullish trend as long as no flat top candles appear, indicating a lull or reversal in the trend. Typically when I'm in a trade, I'll use the Heiken-Ashi candles to get me into a trade, but I'll use standard regular candles to get out. Because if your longest trade and the Heiken-Ashi candles are bullish, when the reversal takes place, it's going to take longer to identify it with a Heiken-Ashi candle because it takes two candles. And if you're in profits and you start getting a reversal with standard candles, a lot of times you might want to take your profits right there. Okay, so we just talked about what the bullish reversal and the bullish trend. Again, it's going to have a flat bottom Heiken-Ashi candle, followed by a smaller doji candle usually, followed by a flat top bearish candle. That would be a reversal. We just looked at some of those. Okay. One thing, this is just kind of an aside, one thing to be aware of, if you've got Heiken-Ashi candles in your chart, the price that's reflected on the chart is not going to be the actual price. It's going to be a few pennies off because of the way that they're constructed. You just look at your, you look at your platform to make sure that what the chart, it's not going to be hugely different, but there will be some difference in that. All right. Just kind of a note on the actual trading the Heiken-Ashi candles. Once you have a valid Heiken-Ashi reversal, the first thing that needs to be true is the Heiken-Ashi candle height has to be at least as large, preferably larger than the prior candles. This is because if you've got a lot of big red candles coming down with flat tops, and you're getting bearish candle, bearish candle, bearish candle, and they're big, big, long red candles, and then you get a couple of tiny little green candles that are Heiken-Ashi reversal candles, that's not good enough to confirm a good reversal. The reversal candles need to be as big or bigger than the candles were coming down. All right. Okay. You'll get to read this if you want to. The rest of it. It's basically just about how to trade beyond that. The stock should have relative strength and relative weakness. This just goes right back to our criteria. All right. And again, final criteria. We take a Heiken-Ashi reversal trade. We want to make sure that the SPY super system is telling us that the institutions are in there. All right, so this just kind of recaps it now on this. Demetrius, do I switch to a lower time frame, an Heiken-Ashi candle chart, go to a 2-minute candles chart to monitor for exit from 5? No, when I'm doing this on a 5-minute chart and I'm looking at 5-minute Heiken-Ashi candles, I'm going to switch to 5-minute standard candles. I'm not going to switch to do a different time frame. All right, so this we just kind of covered how this is done. They combine open closing data from previous period with the open high close data from the current period. 2 candles make it up. Okay, and this fusion minimizes the market noise. It minimizes the chop within the candles. All right. It does a really great job of identifying trends and reversals, and that's why I use them so much in trading. Okay, again, the advantages of the Heiken-Ashi candle. We can see strong buying pressure with these big long candles with flat bottoms and flat tops. The filled and non-filled early. I mean, I've got my bullish candles are always hollow, and my bearish candles are always filled. Again, small Heiken-Ashi candles are those with long upper and lower shadows, suggest indecision over the last 2 periods. Now, it's one thing I'll mention here. When you're looking at a Heiken-Ashi candle, you notice the ones, see how big the wicks are on this one here? And if you were looking at a standard candle with a big wick like that, you're typically, what's happening is the buyers are coming in, they're driving the price in, and here comes the sellers back and driving it down. That's not the case on Heiken-Ashi candles. Heiken-Ashi candles with tails on the top, like this. If you've got a flat bottom with a wick on the top, that is even more bullish. So don't consider that sellers coming in. This is just telling you that we're getting some a better setup bullishly. Again, we're going to just cover this again because this is the bread and butter of Heiken-Ashi candles. Flat bottom candles in an uptrend signals a strong visual of the current trend. All right. Flat bottom candles. You see this flat bottom candle here and here. All right. So this is a bullish trend. Getting a few little red candles stuck in here, but the trend continues. A reversal with color change, but candles are small. That's exactly what you're seeing right here. You see the small candles, even though they're Heiken-Ashi. But notice I said the candles need, if you got a trend with large candles, the reversal is going to be confirmed by bigger candles, or at least as big. This does not confirm anything like that, right? And again, consider that, confirm the Heiken-Ashi candle height is at least as large, preferably larger than the preceding candles. So this is very, very bullish. As you can see, the flat bottoms all the way up. This is a beautiful trend. Here we're getting a reversal here now. And you see the reversal here. Now we're getting some fairly large candles. This would get me out of the trade right here. Okay. Okay. A tip again for using Heiken-Ashi candles. And this is true for everything. Examine nearby support and resistance levels impacting potential gains. When you get into a trade, you should always know where your next support or resistance level is. If you're getting into a trade long, you've got to know where your upside resistance is to make a determination whether you can justify taking the trade. They've got to have enough room to the upside to justify taking the trade. Align the trade with the current market trend if there is a market trend. In other words, if you're taking a Heiken-Ashi reversal to the bullish side, it's going to be better on a day where the market is trending up. You don't really want to do that if the market's trending down. You'd be better for looking for Heiken-Ashi reversals to the bearish side on a day when the market's heading down. Again, look at stocks with relative strength and relative weakness. This is what we've talked about this a couple times. Stick with the market trend when trading indexes. Yeah, if the market's up for the day and you want to trade the SPY, the Q, or the IWM, and the market's bullish, let's try to take them to the long side. Let's wait till it's set up. It's going to go long for us. On choppy days, you can go either way. You can take longs, you can take shorts. The Bollinger Bands is kind of helpful. It's going to tell you, and I'll show you something in the Compass system, or the SPY Super system we have that shows that. But Bollinger Bands expanding tell you that you're coming out of a compression. And again, after entering the trade, switch to standard candles. Identifies waning momentum more quickly using regular candles, which is why we do that. All right. So here's a recap of the Heiken-Ashi candles value. It smooths out price action, reducing noise. Makes identifying trends much easier. It improves identifying confirmation and trend reversals. This is really important. If you've ever traded with regular candles and you've taken, for example, let's say you find a resistance level that's being broken, the stock is breaking up through the resistance level, and then it all comes back and reverses on you. In other words, you get a failed breakout when you jump in on that. By using Heiken-Ashi candles, it's going to reduce the number of times that you get a failed breakout or a failed breakdown, because the Heiken-Ashi candles inherently are confirmation of the move because of the way they're structured. Again, it's going to improve identifying confirmation of trends or trend reversals. And again, it identifies potential excess when the candle bodies shrink or reversal occurs. Those are the advantages of Heiken-Ashi candles. It's a big deal, and I think it's going to help you trading a lot. This is a couple of charts here. I'm going to go into some live charts here in a minute. This is Uber. It does this way back in a couple of years ago, a year and a half ago. But these are regular candles on Uber right here. These are regular candlesticks. This is actually a copy of my TC2000 chart where I actually color code the candles based on if the Bollinger Bands are expanding or not. But for all intents and purposes, we're just looking that these are regular candles. Okay. Notice the gap in here. All right. These are Heiken-Ashi candles. Notice no gaps. No gaps. You notice this reversal right here in Uber. Flat bottom. Notice it's flat tops. Small candles. Big flat bottom. Blue, green candle basically to the upside, followed by flat bottom, flat bottom, flat bottom. That's a beautiful trend reversal right there. And then you'd want to get out as it starts to reverse back down here again. So that's a regular candle right there. And this is Uber on the Heiken-Ashi candles. Okay, I'm going to look at some live charts here now. Just bear with me as I switch screens around a little bit. All right. The first thing I'm going to go to, this by the way this is my SPY super system on Thinkorswim. This is what I use every day. These are some of the scans I've got: a cascading up scan, a cascading down scan on 5 minutes. This tells me stocks with relative strength if the market's moving sideways or down. This tells me stocks with relative weakness if the market is moving sideways or up. I have new yearly highs, and I have several other scans in here that come with the software, if you get the software. But let me just kind of move that out of the way for a minute, so we can look at the we can actually look at the actual chart. Now this is the SPY yesterday. This is yesterday's trading on the S&P, the SPY right now, and the SPY. Now, if you look here, if I look at the style, all right, these are Heiken-Ashi candles I've got. So this is set up as a Heiken-Ashi candles right here. Now this pink line right here is the volume weighted average price. And I'm going to get into some more details on this, but this is the volume weighted average price. See this breakdown right here? This is a big flush. This is tough to catch. All right, this is tough to catch because it's such a big candle, but it does show you the Heiken-Ashi reversal and a continuation of it to the downside, right? And these are the indicators on the compass system over here. This is current time frame momentum. This is multi-time frame momentum. This is what we're interested in trading this, trading the indexes, the current time frame momentum. And I'll get into that. But this shows you a Heiken-Ashi reversal right there. All right. Let me also take a look at XRX. All right, this is XRX. Right, so here's XRX yesterday. This is the volume weighted average price right here, VWAP. See the stock moving sideways. See this breakdown right here. These little arrows here are called pop symbols. The SPY super system puts these on here when the stock is breaking out of compression. So this is a breaking out of compression below the VWAP. This is an entry for a SPY super system methodology trade off of the XRX short if you wanted to trade the stock. Usually I use these for indexes, but I want to point out they can be used for stocks the same way, with a Heiken-Ashi reversal breaking to the downside, all right? Especially if the daily chart is bearish. This is where you take it. Notice the compass, the SPY super system is showing me blue. This is buying, then it goes to yellow, this is selling. So my momentum indicator and current time frame momentum just went from buying to selling. The stock broke below the VWAP with a pop out of the box symbol, a Heiken-Ashi reversal candle. This is what tells me that this is a reversal. This is where you would take it short. And that's a nice trade that you would take in XRX. All right, so I just kind of wanted to show you a couple of those on SPY and XRX. Now I'm also going to show you a couple of other things here. I'm going to switch over to my Thinkorswim platform. I want to show you that. This works as well. This is my Thinkorswim platform. I'm going to show you some Heiken-Ashi candles from yesterday. These are daily Heiken-Ashi candles from yesterday, and I'm going to put up a couple of trades, a couple of stocks. This is a Reddit right here. This is Reddit on a Heiken-Ashi daily chart. Now I'll show you the regular chart. This is what Reddit looks like here. Choppiness, chop, 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 chop. All right, here's Reddit Heiken-Ashi candles right here. All right, so we've had a nice little reversal in Reddit. If I go back and look, it's been moving up pretty nicely, and this is all Heiken-Ashi candles. And you see when you get these flat bottom candles that are fairly big, you tend to continue up. And the blue ones are telling me that I have a Bollinger Band break, but they don't need to be any special color. But this was a nice reversal here, and then we topped out here with a flat topped candle. This is a Heiken-Ashi reversal to the bearish side, but this would probably get you out, but then this would get you right back in again. And as we are right now with Reddit of yesterday, Thursday's candle has a little bit of a tail on it. Yesterday's candle is flat bottom. That's a Heiken-Ashi reversal to the upside, or actually a Heiken-Ashi continuation to the upside. I got a couple other I'm just kind of identifying. QFIN, this is a nice little setup. Let's look at the regular. It's a regular chart on QFIN. Moving up with choppiness. We go to Heiken-Ashi reversal and we look at QFIN, and we've got a beautiful Heiken-Ashi reversal right here with a big candle. It's been moving up. See, we had a nice Heiken-Ashi reversal here, which followed through beautifully. Typically, when you get a Heiken-Ashi reversal, you usually will get some continuations to the upside, over a couple of days to the upside. and bearish to the downside. Like you had here, you had a little bit of a down move. But this is a nice Heiken-Ashi candle on QFIN. So it'd be one I'd be watching for Monday. Uber had a big candle yesterday. There's been a lot of investment going into Uber today, yesterday, some big hedge funds. But again, notice right here, wick and a tail, flat bottom candle, right? That's a Heiken-Ashi reversal candle on Uber. I look at the regular chart. Here's the regular chart. It looks pretty good. It went through this is on my chart here. This is the 100-day moving average. This is 200. But the point is here, it's a Heiken-Ashi reversal candle. All right, and hood is the other one. Another long one we want to look at is hood. I mean, look at how nice this has been on this Heiken-Ashi reversal right here. Just marching up, marching up, marching up. You probably get out right here as it pulls back, and now we're still getting nice candles. This is a Heiken-Ashi reversal just because we get a little tiny tail on this thing. So this is again a Heiken-Ashi, not a reversal actually, but a confirmation of the uptrend on hood. And here's the hood chart right here. This is a really nice chart. And here's earnings on 2/12, so it's really you really can't trade it any kind of long-term trade because it's got earnings first of the week. But I did want to just kind of show you that. To the short side, here's Crocs. Here's Crocs right here with the regular chart. You can see we've had a big pull down of Crocs, then a move up, pulling down. But let's look at the Heiken-Ashi candle from yesterday. We're in a trend, a downtrend. Here's a Heiken-Ashi candle to the downside. Flat top, flat top, flat top. Wick and a tail, flat top. This is a continuation to the downside of Crocs. So this is what you'd be looking at Monday for a short. I would recommend you take a look at this. The problem is you've got earnings on the 13th, so you need to be out before the 13th. You shouldn't be holding trades over earnings. This is SMG, no earnings to worry about. We got a downside move here. And we had a wick and a tail, and now another move to the downside. This is a Heiken-Ashi continuation to the short side on Scott's Miracle-Gro. Here's the actual trade setup right here. You can see it's a short. It looks like it's rolling over pretty nicely. This is so again. This just kind of shows you some examples of Heiken-Ashi candles. Short side, there's UAA off of earnings. Big candle right there with a flat top. If we look at the regular setups, here's what we've got. Move down, continuation down. Pretty nice short setup on UAA. Target, this was one we took in the room yesterday. We took a swing trade in Target to the downside. And we did this based on this Heiken-Ashi reversal right here off of this continuation. It's a continuation of the Heiken-Ashi reversal. The downside, this is the volume. The volume was pretty high. And if I look at the regular candles on Target, it looks like it's trying to roll over. It's got some support down here, but it's definitely rolling over. So that's one we actually took in the room yesterday. And also another one is XRX as a short. We showed that on the 5-minute chart. Here's our XRX breaking down. Looking at Heiken-Ashi, you got a couple of wicks and tails here. Continuation of this Heiken-Ashi to the downside right there. All right, so that's what Heiken-Ashi candles look like, and that's how I use them in my trading. Again, that was TC2000. If you're asking about that, that was a TC2000. I use that for charting and some scanning. This is Thinkorswim right here. This is my compass system. I'm going to show you some more of that as we move forward here. And in the meantime, I'm going to bring up. We looked at those. All right, so now, any other questions on Heiken-Ashi? Okay, do I only Heiken-Ashi for trade setups and the entry, exit trade with regular candles? That's what I do, John. I do enter with Heiken-Ashi reversals, and then I switch to regular candles to get out. But I have both charts. I have in my TC2000. I have both charts side by side, regular and Heiken-Ashi. But over there on the TOS system in the room, I'll switch from Heiken-Ashi. Once we're in a trade, I'll switch back to regular to identify when we're going to get out. Okay, so I'm going to talk now about the SPY Super System, the results that we've had in the room and on the alert service. I'm going to take a few minutes to go through this, and then we're going to look at some real charts of trades that we took. This just to kind of give you an update. Again, I've been doing this since 2022. I didn't actually go back and do 22. had a good year in 2022, but I just have 2023 and 2024. If you invested $2,000 in each trade, taking in the SPY Super System room, then it produced a little over 60,000 in profits. When I say if you had a $50,000 account, this is just arbitrary. You'd be using 4% of your account for each trade. The balance would have ended up to around 110,000 at the end of the year. So at the end of the year, you'd only been using about 2% of your trade. But this is an arbitrary number that I use just so I can basically judge the results that I'm getting week after week and month after month taking trades, and I use that as a baseline. Obviously, some people are using way less than that. Some people are using way more than that, and a lot of people don't use the same amount on each trade depending on the market conditions. But this is the criteria that I used. All right, so that's to 2023, 60,000. 2024 slipped down to 55,000. Still, I mean, it depends. A lot of the profits depend on what kind of market conditions we're in. Choppy markets, it's hard to make as much money as it is in trending markets. But those are pretty good results. Now I'm gonna run through some trades this year, January through most of the year here. But the reason I'm just showing this, I want to show you the trades we take. I want to show you what kind of percentage of gains you can expect from the trades that we take in the room and the alerts that we take. This was January, 10% on JP Morgan, Vertex 37. So you can see we stick in there in the usually be 15 to 30%, sometimes 40%. We had 96% in Boeing. We do take losses. We take losses. It's important to understand that there's going to be some losses on trades, and even trading, even a month of trading. I'll show you. I have one losing month in 2024, and I'll show you that one. But again, you can see what the percentage gains are like on these trades, and these are pretty good. We had January trades, 20 wins and 2 losses, 90% win rate. So if you invested 2,000 in each trade, it was $7,505 profit. February was our best month of 2024. Again, you can see the percentages: 40%, 25%, flat here, 11%, 56, but sticking right in there in the 20, 30, 40% range. February, we had 24 wins and 2 losses, 92% win rate, and 2,000 invested in each trade, netted 11,745. This was a really nice month in February. On the alert service, which I don't alert every trade that we take in the room because several reasons. It's be too late in the day to take it. You're going to be in a too short a period of time. It may be more of a spec trade. February alerted trades, 20 and 2. Again, you can see we had 4 less trades, made 69.30 on 2,000 invested in the alert service. Okay, these are May, and in May we had nice percentage gains here, the same as we usually do. Time spreads, which we talked about, those are our earning trades. Again, May 15 and 2, 4,900, 88% win rate. May trades in the room, 29 and 7, 81% win rate, netted 57.36. All right, so you can see these. I'm not going to go through every single one, but again, you can see that we have a lot of consistency on month to month. Profits are, they're going to be, a lot of it's going to be depending on what the market's giving us. And it's interesting, in June, the alerted trades, we have 14 out of 15 and $8,300 in profits. We actually made more in the alert service than we made in the room. We had more trades in the room. July, another, all consistent here, very consistent. You can see the percentage gains: 85%, the 6,000, 75%, 3,300. Pretty low win rate for me on the alert side here. Okay, it's August. Again, 17 and 2, 8 and 1. August, a very slow month, very tough to trade in August. This is a September. I wanted to mention this. I had a losing month last year. I had one losing month, September. And people ask me that all the time. Did you have any losing months? Yes, I did. I had one losing month. Everybody has losing months. But we didn't have a lot of trades. We had 8 wins and 5 losses. It just wasn't a lot of trades I could take. 2,000 invested in each trade, netted a 1786 loss in the room. The alerts, we had 8 and 4. We lost $295 on the alerts. So I want to be transparent about here. Sometimes we get a month where we don't make money. Not very many. I mean, I've had 3 losing months in the last 3 years, a little over 3 years, but I do want you to be aware of that. All right. Nobody wins every trade. All right, so these were the October results. We bounced right back with 17 and 3 for 4,7,400 in profits, 14 and 3 on the alerts, 6,000 in profits. And in November trades, again, 14 and 2, not a lot of trades, but of almost 6,000, and the win rates were nice. Notice the win rates in September. This is low. I've never had win rates this low in a long, long time, but that happens. Okay, now just to talk a little bit about the alert service before I get into the SPY super system methodologies of trading intraday trades. Question here, Willie. Approximately what buying power is needed at any given time in each month? All 50,000? No. Typically, most of the time, you're not going to have more than about 4 or 5 trades on at a time. So, you know, if you get to 6 or 7 trades, that's pretty rare. 4 or 5 at a time. So if you're putting 2,000 into a trade, you're probably going to need buying power. Well, you got to have 25,000 in the account. So if you've got 30 or 35,000 in the account, you're in fine shape as far as doing that's concerned. But you know, you can obviously, you've got to trade within what your comfort level is as far as risk is concerned. Do I add both the alerted trades and the option room trades for the total? The alerted trades, well, the option room trades, the alerted trades are all option room trades. So everything that you're showing, that you see on the alerts, is being done in the room. In other words, when I take a trade in the room, it may be alerted, it may not be, but everything that goes out in an alert is part of the room total. So yeah, those are the alert trades would be part of the totals in the room. Okay. All right. So for the alert service, basically we trade the best and skip the rest. Obviously, it's what we're looking to do. The alert's going to include a stock symbol. It's going to include a strike price, an expiration date, and a price to pay for the option. You know, and again, that could be like, you know, $1.25 to $1.30, something like that. Now, you're going to get an alert when we enter the trade. Likely the exit price, the exit trade is going to come next separately, either sometime that day or maybe 1 or 2 days later. And when you get the alert for the exit price, in other words, take profit or take loss, you want to make sure that's good till canceled. So when the trade goes in, you want to make sure that that trade is going to be working when the market opens in the morning. It's really important that that trade is working when the market opens in the morning, because sometimes you get a gap up or gap down, and it'll hit your price, and you can get closed on the trade. And if you were waiting to go see it, you may miss it. All right. So again, how do we achieve these stunning results? And I've been talking about this SPY super system. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. This is what we're looking for. All right. So these are the trades that we're going to take when these conditions are there. So we only take trades when both of these are in our favor. That's not 100% true. I'll take trades when the institutions are driving a trade, as long as the market internals aren't against me. If the market internals are neutral, but the institutions are buying, I'll go ahead and take that trade. And how do we do this? We do what's called the triple screen assessment. It's actually a multi-time frame. I look at momentum. We look at momentum. We look at trend, and we look at money flow. This is the key thing for me right here: the momentum of how a stock is traded. This is what tells me that the institutions are driving these trades. The trend does as well, but momentum specifically. Now I'm going to get into some of this stuff here. This is the compass system right now on Thinkorswim. All right, and it's going to look a little bit different now than it does here, but basically what you've got is this is Tesla on a 5-minute chart. This is long-term. This is long-term trend right here. All right, this is multi-time frame momentum. If this is looking at a 5-minute chart, this is the 5, the 15, and the 45. It's looking at all those momentums to make a determination if they should be green, in this case bullish. Green and blue is bullish, red and yellow are bearish. It's looking at the multi-time frame to see if it's bullish, and then it's looking at the current time frame. This is the 5-minute time frame. This is the most important one for intraday trades. You want this to be blue or green for bullish, red or yellow for bearish. And this one I've taken off. I'm going to show you a different setup for this. I don't use this one anymore. Okay. Now, two different kind of trades that we take in the room. We take these SPY super system trades. These are the methodology trading the Qs, the SPY, and the IWM. We call it the SPY super system. It's based on just trading off the indexes, based on what the institutions are doing, and these are quick trades. As I said, these SPY super system trades, you're only going to have one trade on at a time, and they'll be very short duration. So these are all intraday quick trades. 1 candle, 2 candles, 3 candles, maybe 6 candles, but not an awful long time. And one of the reasons I actually did this was because so many people wanted to make some trades during the day. They got bored, this over trading thing, that I introduced this so that they have the ability to look at this and take multiple trades. Okay, so on the SPY super system methodology, trading the Qs, the SPY, the IWM, can also trade the NQ, the ES. In July, which is when we started it, we were 16-0. And now when I say we, these are all the trades that I took, because I can't post these, and I can't send alerts on them. But I do talk about it in the room and say, okay, I'm taking a trade, or there's a setup coming for the SPY super system right now. But these are the ones that I took. So other people had made more money, other people made less money. In August, we were 56, 6, and 2. See that huge number of trades. All right, 56, 6, and 2. And 2,000 invested in each trade produced $8,200. This is not included in the totals that we just saw for the room and the alert service. This is a completely separate P&L that you'll see. September, 40 wins, 3 losses, 2 break evens. 2,000 invested in each trade produced 71.32. October, 33 and 4, 4,800. Again, it's the SPY super system, 1 trade at a time. Then I've added November, we had 54 and 5, 9,300, and in December it was 69 and 15. Again, quite a few trades, but quite a few losses, but 10,000, a little over 10,000 in profits. Now, it's important to remember that these are the trades that I took, all right? Because I don't post them. I tell you, it's setting up, I'm taking a trade. Each trade is going to be responsible for their own trades and using this methodology, because it's very, very quick. All right, so let's look at the October SPY super system results, both those SPY super system methodology using the indexes and the trading room. So this was the October SPY super system trades for the SPY, Q, and IWM. 33 and 4, 89% win rate, 48.31 profit. This was the room. 17 wins, 3 losses, only 20 trades. You see the difference here? 85% win rate, 2,000 in each trade, created 74.48. So this is not included in this. These are completely separate P&Ls depending upon this is the intraday trades, the SPY super system trades that we do each day. Some days we don't get, I don't think I took any yesterday, but we take these, and these are also in the room, and these would be ones that go out in the most of them go out on the alert service. All right, so these are ones that I've taken and everybody else has taken. These are ones that I've noticed in the room, told you that I was taking a trade, mentioned the setup. But a lot of traders have this software and they're doing it themselves as well. So they're trading themselves off of these SPY super system setups. So that was October. Here's November. SPY super system being the methodology using the indexes. 554 and 5, 93.70. In the room, we were 14 and 2 for 73.93. So again, this is I don't post these, so these are going to vary a lot depending upon the individual trader's skill level and ability to trade quickly off of these 5-minute charts. All right, and December, that's the last one I did here. SPY super system, 69 and 15, 82% win rate, but 10,450. See, lower win rate, more money. The thing with the SPY super system is, I'll show you here in a second, is your entry is going to be very, very close to the support and resistance level. So your losses are going to be small. You're not going to allow these things to go very far before you get out. December room, 14 and 3, 45.97. Right, so pretty good month if you did them both. All right, and this is the whole October, December. This is just kind of the 4th quarter of the room and the SPY super system trading methodology using the indexes. All right, so October, December 2024, 156 wins and 24 losses. That's a lot of trades. That's a lot of trades. So we're trading these intraday. 87% win rate. It produced 24,000. October, December, the option room trades. We had 44 and 7, 86% win rate. 2,000 produced 17,774. So again, that's a total of 42,000 over 400. But again, keeping in mind, these are my results. Everybody's going to be different because I'm not posting these. I'm telling you that the setups are there, or identifying when the setups are there. A lot of traders are identifying themselves and taking them. I know traders that did a lot better than I did trading the SPY super system, because that's all they do. They watch it and trade it all day. I'm looking at those. I'm looking at swing trades. I'm answering questions. That's a good question, Anthony. When I'm choosing call or put, example on the SPY, what strike do I choose? How long time? What delta? When there's two different things here. There's two different things on the SPY super system. When I'm trading off the 5-minute chart, from market open, I don't trade usually till about 10. From the first trade I take up to about 1 o'clock in the afternoon, I'm going to take current day's expiration, 0 DTE on the SPY, the Qs, the IWM. Once lunchtime goes by, I'm going to switch to 1 DTE. I'm going to switch to the next day's expiration, so that if I get any kind of choppiness or compression, I'm going to mitigate any kind of time decay I have on the trade. And I'm just taking one strike in the money. One strike in the money, Anthony, on all of those. And so I don't go by the delta on those. I go by the delta on my swing trades, but not on these. I'm just taking one in the money. Do I mention when I get out of a super system trade? Yes, I do. I tell you if I'm in it. They're moving fast. I'll say I'll get in, and I'll get in here, and I'll say, okay, I'm getting out of the trade now. And everybody can follow that. Some people stay in it and make more money than I did, or get out and lose less. So, but yeah, I do tell you what I'm doing. Are these two different programs or the same? This is the same program. We're using the same indicators. We're using two different methodologies. We're using a 5-minute candlestick methodology on the institutions. All right, let's look at it right here. This is the SPY super system trader here on the SPY. All right, so this is what we're using. It looks really busy. This is the current time frame momentum right here. This is like critical. This is the one we use. And it seems really busy, but for the SPY super system methodology, using the indexes, this is all I'm using. I'm using the current time frame momentum right here that I've got pointed out. I'm using the VWAP, pink line here, and I'm using the 15 EMA, this green line here. That's all I need to do the SPY super system trade. And I'll show you, I've actually created another template for this, that if you buy the SPY super system software, you'll get this template as well. This is a new template for just the SPY super system. Notice all I've got is the current time frame momentum and the actual oscillator on here with the VWAP and the 15 EMA. That's all you need. That's what you would trade off the SPY super. That's got all the information you need to trade the SPY super system right there, all right? So notice here on the SPY, you notice that the institutions were selling on the 5-minute. Right here, see the red and yellow is selling, blue and green is buying. Notice they went from selling to buying. This is where I entered. As soon as they went to buying and the stock price broke above the VWAP and the 15 EMA, I jumped in here. All right, this is where the entrance was. Now, once the stock starts to move up, that I get in on the VWAP, my 15 becomes my stop because it's moving up. So I stay in this trade as long as the stock price stays above the 15. Now, once I start to get some hesitation, could have taken it off right here. I took it off right here when I started getting these dojis, and I'm a little extended from the 15. But notice that the current time frame momentum stayed green the whole time on here, right? And that was $220 of profit. That's a lot. Most of our SPY super system trades, especially when the market's choppy like it is now, are typically somewhere about between $70 and $120 a contract profit. That's about what we're getting right now. Sometimes 40, sometimes 30 if it's really choppy. But this was a good one for 220. Again, and this is what the new template looks like. New template looks like, and you get both of these, and you can flip them back and forth on Thinkorswim. So you would take this trade, this template, and you can see the trade right here. And this isn't the same setup, but you notice how we went green here, then went yellow. Even though it bounced off the 15, it's hard to take that one right there. It's hard to take that one because you gotta wait for the break. But this would be a nice break right here. As it compresses, you get a pop symbol. You can take it long right here and then ride it up. Again, this is another one on the SPY. And just so you'll see these over and over again, this is a 5-minute chart. Current time frame momentum. See how this is compressing? I'm not chasing it up here. It's too far away from the 15. I wait for it to come back to the 15. I buy it right here. Everything's green. Institutions are buying. I use the 15 as a stop. As long as it stays above the 15, I stay in it, and I get it out of it right here as it starts to flatten out. I could have got it probably taken it off here, but I didn't. I took it off up here. All right, so I'll just show you a few of these so you can see them. Chris, what's the dotted line? The dotted line is called a trend dots. I don't really use it. It kind of is a slower line for the trend. When the trend crosses the 15, it's kind of a bullish indicator. I don't use that indicator. Omar, for you, you can't be glued to your computer all day, right? For better to receive incoming and outgoing alerts, to do it on my cell phone. So you would get all the alerted trades. You would get all the alerted trades. They come to you, and you would be trading those. Those are typically going to be all day trades or mostly swing trades. Those are ones that you're mostly going to be holding overnight. Yeah, the alert service is fine for that. Does it work equally well for futures? Can you please show an NQ chat? Yes, I will. When I get done here, let me switch back. It works for NQ, BJ. Let me show you that. Again, this is another SPY super system trade that I took right here. Notice it went yellow selling, blue buying, popped above the VWAP and above the 15. 15 is my stop. Doesn't do much. This is IWM. This is the Russell 2000. Just kind of sits in there, but it doesn't go below the 15. Never closes below the 15. I stay in it and I get out right here. $90 profit per contract. That's more common than what you'll see on some of these. Let me just do this quickly here. Let me pop this out of the way. You wanted to see NQ. All right, so here's the NQ. All right, so it's the futures. Here's the futures yesterday. This is whoops, I'm gonna move this forward here. Back a little too far. All right, so here's the futures from yesterday. And here's your indicators. Right here. Green, selling right here. Break down below the 15. Use it exactly the same way on the NQ and ES or the RTY. Anything you can use it on gold and silver. Anything you want, any commodities. Gordon, am I using the quant line? The quant line is actually a long-term trend. I do use that on the swing trades. I don't use that at any of these 5-minute trades, no. Is the SPY the same as the YM and the futures? I believe so, yeah. I think actually the futures I think this futures on the SPY is the ES. The ES. What did I mean when I said internals? Market internals. What's the market doing during the day? When I take a look at internals, I'm looking at the cumulative volume of stocks moving up minus the cumulative volume of the stock moving down. If I've got a lot more volume on stocks moving up than I do on stocks moving down, that's bullishness. If it's vice versa, that's bearishness. That's the market internals. And like I said, the quant line I'm only using here. This is a long-term trend. I'm only using this on swing trades, which I'll show you here in just a bit. Okay, sure. Omar, you're not clear which of your programs is for alerts and which one is for working with me on the computer. Now, if the alert service, I'll show you this when I show you the different offers at the end. We have right now, the way that they've structured this, you can actually, if you get the alert service, you're actually getting the room as well. They come together. Okay, you get the alerts and you get the room all together. But some people just want, they just want to get alerts, but they're in the room anyway. So that way you can come and go from the room if you want to, but you'll be getting the alerts, right? The only thing you wouldn't have is the actual software that we use in the room, but you would have the alert service and the room. Okay, so that's for the you get them both. Do we have a SPY super system for Ninja Trader 8 platform to trade prop accounts? I don't think now Ninja. Dave Kushner has a room over there that he trades prop off of the Ninja 8 platform. I don't trade off of Ninja 8. He uses it for futures. but I just use this for trading options on stocks. Chris, would I be able to show the chart for NQ 1 minute from Friday to 9 to 12? I'm not going to do that right now. I don't want to keep switching back and forth because, I'm cognizant of people's time. Okay, so this is another SPY super system trade. I think we can see what I'm getting at here. Here's the IWM going sideways. It's breaking down with a pop out of the box symbol. The current time frame momentum is red. The institutions are selling. We take a short here. We ride this thing down for $120 profit. Then I see it turns to blue. You'd have to be out before that, or as that occurs. All right. And this was another big SPY super system trade here. So again, I think, you've probably seen enough of these to understand what we're talking about. The VWAP is important. We're breaking below the VWAP. We enter here as this goes. This was already yellow, which means bearish, and then it goes to red, which is even more bearish. So it's bearish here, and the institutions are selling, so we can jump in right here. Now we're using the 15 as our stop. Right now, notice the pricing is coming along the 15. It never closes above it. It pops above it, but it closes below it. It closes below it. We stay in the trade and we ride this thing down. All right, this little white line here is a pivot point. That's something I'm always aware of. A lot of times that can offer support or resistance, so I'm being careful when it gets to here, and then I get out right down here. That was a big trade. That's probably one of the bigger ones that you'd ever get for that many candlesticks. All right, here's another good one on the IWM, and you can see selling, buying, all right? So hopefully that's fairly clear. Can you get a picture of the chart when you're offline? Chris, if you stick around till the end, I'll bring that back up again on the NQ. Right, here's the SPY here. Again, I didn't put anything on here because I wanted you to be able to kind of look at this and see if you can see where the trade would be. See, it's selling. Here's buying right here. See this pop right here? But you wouldn't take it because it's at the VWAP. This is where you would take the trade right here. It stays blue, institutions buying, it breaks above the VWAP and it moves up. Okay? Moves up pretty nicely. Then you get out of here, of course, and take it off. There's the IWM. There's another one. You can see these. You can see these setups, right? See the compression. See it's gone to green. It goes yellow to green. Buying. You buy it here. Get in as it breaks above the 15, and then you stay in it. And you probably would get out right in here. It's just flattening out pretty good, but it's up a little bit. It's because the green line is the 15 EMA is sloping up. Another SPY trade here. This is one I took both ways. I took it short right here. Notice it's the red institution selling. Breaks below the VWAP on a pop symbol, which tells me they're breaking out of compression. Take it short here, out of it right back here. Just three candles and out. And then I'm watching it go long. You notice it goes blue, selling to buying. It goes blue right here. I buy the SPY right here as it breaks above the 15, and I ride this up, and it gets close to the VWAP. I'm watching this. I'm sorry, it gets close to the pivot, and I'm watching this. As soon as I get a doji, I'm out of the trade. So I traded it short, traded it long. Am I using the VWAP and the Heiken-Ashi chart? I am, Chris. Yes. No, I leave the Heiken-Ashi, the VWAP up there. All right. I'm looking at the Heiken-Ashi candle breaking the VWAP. Now I'm also looking at the regular candle to make sure the VWAP is being broken. But yeah, I leave it on there for the Heiken-Ashi candle. This is the VWAP on the Heiken-Ashi candlesticks right here. Well, these are regular candles, sorry. Yeah, I do leave it on there for the Heiken-Ashi. Right, here's the SPY. Here's the SPY again. You can see we're coming down. Where would you buy this? This is, if you bought this thing here as it broke above the 15, this would likely be a losing trade because it popped up and it came right back down again. But this would be a winning trade. As it breaks down here, it goes yellow, you buy it here. So again, you're gonna have some losers on these, as you noticed. All right, these are trades that I took for the room and for the alert service. These are I'm gonna show you daily charts. I'm gonna show you some 5-minute charts, but these are inside the room trades that we take and alerts that we take. This was Palantir back just in October, I think, and Palantir was just kind of moving sideways. Notice it? It's kind of chopping around here color-wise. It's just compressing. Right? And what I found was here, they got a breakout. It went blue, buying, selling, back to buying again, and I was getting a break out of this compression right here. This is where we took the trade. Is it took a swing trade in this. We held it for 2 days and made 31% on Palantir, which is really strong right now, by the way. It just had a big move on earnings. This was Twilio. Again, you can see here, the yellow to green, is arrows a little bit off, but yellow to green, buy it right here, 58% profit in 2 days. As it broke out, you see how it's breaking out, and notice the trend here, by the way, is green. Long-term trend is green. Most of the time, I want that to line up. Technically, I'm looking at these things. Sometimes I might take them if the trend is not green, but I believe that the other indicators are strong enough that's going to actually switch the trend over soon. This was Lulu, gap down on earnings. I didn't take it until it broke right here. This is where I took it, as it went from blue buying on the multi-time frame to selling on the multi-time frame, and it's breaking down below this compression level. I don't use the VWAP on the daily chart. Breaks down below this level, falls down nicely. It was a nice trade. In at 192 out of 300. Another daily chart here. Pretty obviously, we went from selling to buying right there on that candlestick. That's where I take it. As the institutions started buying it, and nice little move in MDT. VKTX, another good one. Again, green across the board. Buy it here as it pops. Didn't get a very big profit on that thing. I kind of chased it a little bit, I think, to get that one. And this was McDonald's, again off a daily chart. Took it right here as it broke. This shaded area, the SPY super system produces this. It's called the dynamic compression zone. I also had a compression break arrow right here, but it broke out of the dynamic compression zone. I took it here. I get out here. Was in overnight, in for 830 a contract, out for 1130 the next morning. 37% gain, was pretty nice. Now this is the 5-minute chart. This was an intraday trade on Amazon using the SPY super system methodology. Now notice the trend here is yellow, all right? But the current time frame and multiple time frame, I'm interested in the current time frame momentum right here. It's green, and I'm looking for the 15. I'm looking for a move in this stock. And I've looked at the technicals on it for the daily before I do this, and it's breaking up. So this is where I took this, and we had this for 45 minutes and made 32% on Amazon. A nice one at ENPH to the downside. See the compression. Pop out of the box to the downside. Everything's red. Institutions are selling the heck out of this thing. They're definitely selling this. No question about it. We take it right here as it breaks down off of the 15, write it down for an hour for 20%. This was a good one for Verizon. This was a 50% in 1 hour. Same thing, compression, breaks below, everything red. I mean, they were selling the heck out of this thing. Obviously, you're going to go short. And Verizon, the premiums on Verizon really tightly, bid ask is really small. It doesn't move a lot, so you didn't have to pay a lot. I paid $45 a contract for next week's puts on this thing, and get out in an hour for 50% profit. Get out for 670 for contract. This was Tesla. We used it overnight. Just kind of show you how we can use this for overnight trades as well. It was bearish here. You can see it was bearish across the board, and it broke down here at the end of the day with a pop out of the box signal. So we took it short overnight, and we did get a gap down. So it was pretty nice. Doesn't always work, but we get a nice gap down in that. All right. So again, that covers all of them. Let me see if we. Let's see. Looks like there is if there's a POB, you don't wait for Heiken-Ashi reversal. Yeah, Peter, sometimes a POB is a pullback opportunity, I guess is what you're talking about. I typically do wait for Heiken-Ashi reversal. Recently, I'm doing more and more Heiken-Ashi reversals. I found that if I stick with the Heiken-Ashi reversals, I take fewer trades. Oh, the pop out of the box. No, the pop out of the box is not right now is not as important to me as a Heiken-Ashi reversal. I'm much more interested out of the Heiken-Ashi reversal. I want a Heiken-Ashi reversal. And what I found is with the Heiken-Ashi reversal, if you're using the Heiken-Ashi reversal, you're going to take fewer trades because you're going to miss some of the failed breakouts. All right. And you're going to get in a little bit later on some of them, because if you had taken the original candle, you would have been in earlier, because the Heiken-Ashi candle takes 2 candles to create it, to create the breakout and the confirmation of the breakout. But I'm getting into trades that are much more likely to succeed. So I've had fewer trades, but making just as much money. So that's important. The trades you sure didn't have all Heiken-Ashi reversals. Yeah, I don't, some of those I just put up there. I'm not sure. I didn't have Heiken-Ashi candles on them, for one thing. I was just showing regular charts for those. But the trades I've been taking, that I take in the room, are going to have, there's almost always going to be a Heiken-Ashi reversal most of the time. And like, listen, nothing's 100%, but most of the time, I'm going to take Heiken-Ashi reversals. When I take the charts out and I make a graphic out of them, I probably just had regular charts in it to show where I took it and where I get out, and I wasn't showing Heiken-Ashi at the time. But they're almost always going to have Heiken-Ashi reversals. That's one of the things I'm looking for on trades that I take now. Okay, so again, here's what we use in the room. The strategies, obviously, calls and puts, debit spreads, time spreads, which is non-directional, weekly ATMs, which is a nice trade for a neutral to bullish stock if you get the right kind of market for it. Credit spreads, and the SPY Super System trades that we take for quick intraday SPY Super System trades on the indexes. Okay, do I use 0 DTE options in your strategy? Do you roll positions? Omar, I use 0 DTE on the SPY Super System trades when I'm up till about 1 o'clock in the afternoon. After 1 o'clock, I go to the next day's expiration date. Not that I'm going to hold them overnight, but what the 0 DTE becomes a problem after about 1 o'clock or 1:30 is if you get a compression in the stock. In other words, you enter the trade and the stock's still bullish, for example, if you're going long, but it's moving sideways, you're going to get quite a bit of time decay coming out of those trades. Now, if you went with a deeper in the money, you probably wouldn't get as much time decay, but the problem is you're paying too much for the trade. So yeah, I'll go to the next day's expiration after 1 o'clock. Do I roll positions? Rolling a position, this is kind of a misnomer, all right? Rolling a position is closing one position and opening another position. All right, people say, "Well, I've got a call that's expiring this week. I'm going to roll it out." So what you're doing is you're closing out this week's call and buying next week's call. And you can do it, maybe take a gain in this one, and if you're still bullish, you go out further in time. That you're trying to get more profits. You think you're still bullish on it. It's really, you call it a roll, but you're actually creating a new position. Anytime you do a roll, you're creating a new position. And if you're rolling one that's against you, and it's gone against you technically, and you roll it from this week out 3 weeks, so you're taking a loss in this one, you're going out long and thinking that it's gonna recover, you better be sure that stock is bullish on the daily chart. Because if you're rolling it out just to roll it out, because you want to give more time to something that isn't working, that's very dangerous, in my opinion. Last question, are the signals only by SMS or is there a Discord email? We don't have an email, I do have a Discord room. And all the trades that go out on alerts and all the trades I take in the room are posted in the Discord room. We have 2 other professional traders in the Discord room. You can get in there and talk to them. They post charts, they post annotated charts, they go over sector information, they go over economic information in the room. So they get a lot of information in that Discord room, and all the trades are posted in there. So if you don't have it on SMS or something, it wouldn't. You can get them on the alert off of Discord. But if you're in the room, in my room, you're getting the alerts. Okay, so here's this is the offers that we're talking about here. Now, this is really they've allowed us to put both the trading room and the SMS text alert service together. In other words, it used to be the alert service was one price, the room was another. But we've had a lot of people that want to be in the room a little bit, but they can't be in the room all the time, but they still want to get the trades. So we've lumped them together. They've got the alert service and the room. You can get a 2-week trial on this now, and then you get to 3. It becomes the 3 months after 3 months. it's going to be 396 for the quarter. But this includes the text alert service, the live trading room, my live trading room, and the way to. I have about 30 videos on what they call masterclass on basically how to trade these different strategies. I go into a lot of detail on the SPY super system, on the indicators, etc. Annual access is obviously a lot better to go this way, and this doesn't come with a 2-week trial. This does, but with a 2-week trial here. But if you like it, you can take the yearly. It's 50% off right now, $11.96 for a whole year for both the text service and the room. So you're gonna, if you're in the room, you're gonna be able to see the charts that I've got, and you're gonna be able to see the SPY super system trades. They'll all be in there for you. And then there's a one-time offer where you can get $24.96. This gives you the room and the alert service for lifetime. Right now, the other thing is on the actual software, what we call the Compass trading system, which was the SPY super system with the scanners. This is the SPY super system software. This is what makes up this right here. This is the SPY super system software that goes on Thinkorswim. It also can go on Ninja, and they'll be installed for you on your computer by Rightline. They'll go in there and put it on there. They'll take over your computer and pop it on. It's going to look exactly the same as mine, with all the scanners and with all the indicators. All right, and you also, if you buy the software, you get 1 month in the options trading room and alert service. You get some 1 month of alert service in the trading room. If you do a one-time payment, which is lifetime, which is actually a really, really good deal. This is $19.98. This is really cheap for the software forever. Again, all the same things, but you get 3 months in the room, 3 months of alert service. Pretty nice offer they did. So those are the two things. This would be for the alert service in the room. So if you want to be in the alert service, this is what you get. You can do the 2-week trial if you want, and that's going to roll over to the quarterly. But you can just buy it annually for $11.96. And here's the software. Right, so those are the offers. I think in the chat box, they probably have links to all the offers that we just talked about here. Yeah, it does. Rory's got them all up here. Very, thanks, Rory, appreciate it. Omar, yeah, that's clear now, I understand. Okay, excellent. If you buy the software, do you get any updates? You get all the updates. If you buy the software, you own the software. Any new adjustments to the indicators we make, any different templates we put out, any new scanners that are created, you get all of that. All right, right now there's no maintenance on any of this stuff, which is really pretty unusual actually for software companies. But right now you get it, you're grandfathered in, you get every change that's made as time goes on. All right, PJ, got that? All right, so that pretty much wraps up my portion of the webinar. I really want to thank everybody for coming today. I spent quite a lot of time on this. I wanted to spend some decent time on the Heiken-Ashi so those that haven't used it can understand it. Omar, to make it clear, there are two different products. One, the alerts and the live, and the other is the software. That's correct. That's why there are two different prices. That's correct. One is the software. This is the software. Right here, this is the software that the SPY Super System software that goes on your Thinkorswim or Ninja platform. This is the room and the alert service. You don't have to have the software. The software will be displayed in the room. You can see it, but if you have the software yourself, you can do all of these SPY Super System trades or any of these trades yourself. You don't even need to be in the room. You've got the basis for it. Okay. Waiting for you to show the NQ. I'm going to get that. Okay, thanks, Chris. And thank you for reminding me. Larry, you need to talk to Rory about that. Larry, you trade futures, but this system looks easier. I mean, listen, I tell you that this is my feeling about futures. A lot of people are really good at trading futures. The one thing that trading stock indexes, stocks are, individual stocks like Tesla or Verizon or any of these other stocks, is you can't really trade relative strength and relative weakness very well in futures. Now, what I do when I look at the SPY, the Q, and the IWM is I'm going to take a look at which one of those indexes is outperforming for the day. Which stock, if the SPY is up 1.4%, the Qs are up 0.8%, and the IWM is up 0.5%, I'm going to probably trade trade the SPY if it's the strongest index, as long as it doesn't have any nearby resistance. I'm going to trade the strongest one. So in essence, I'm kind of trading relative strength and relative weakness. But stocks trading relative strength and relative weakness are more effective, in my opinion. Is there a prop firm that trades stock? Really, Larry, I don't know. I don't trade with prop firms. All right, I trade my own money. I'm not really interested in trading prop firms, but you would have to check with the prop firms what they let you trade. Don't know. Let me see if I can find the 1 minute chart of the NQ. Hold on a second. I don't never use one, so I'm not sure what it's going to look like. I'm not even sure if it puts the indicators on there. Let me see. Yeah, it puts them. So there's the NQ 1 minute right there from Friday. This is after hours. Here it is during the trading day. Same thing. Is that what you're looking for, Chris? Friday, 9 a.m. to 12. Okay, let me go back. This is Friday. Make sure I'm on Friday. Yep. 9 to 12. Back we go. Right, so there's 9 o'clock right there. And of course, it's coming in minute sigma, so that's a pretty, but I can extend it out a little bit if you want. As you can see, here's market open. Pretty big breakdown there. Another breakdown there. Big breakdown there. Probably something to do with that was, I think that was the information on the Michigan sentiment. Big breakdown and chop. One of them quite choppy most of the day. Notice it's way below the VWAP almost all day long. Okay. Chris, got that? Omar, if you buy the trading room today, we'll be on Discord immediately on Monday, or we'll have access to live broadcast with you. If you get in the trading room today, you'll be in the room on Monday. You also get access to the Discord, yeah. Gordon, trader funder allows options. Okay, I can't really discuss prop firms because I don't know anything about them. I don't use them. What was the Michigan sentiment event? That was when the Michigan came in with basically their expectations on inflation went from 3.3 to 4.3 last month, 3.3 this month, 4.3, and the consumer confidence dropped. Okay, everybody, thanks very much. Listen, I appreciate all the questions. Thanks so much, Chris. I hope that helped you. Looking at with the indicators on here. Again, it was kind of a wild trading day Friday. We had a lot of this flushes and then chop, flush and chop. Again, I don't think I did a SPY super system trade on Friday. But again, we did take target. We did take target overnight. We took it for a swing trade on target. So this. All right. So those are offers. Thanks so much. Trying to see if it'll work for you. I went fast. Yeah, you took a screenshot. Okay. Well, again, if it's the indicators themselves are when you're doing 1 minute, they're going to flop around pretty fast. I mean, this is a 1 minute chart. Look at the size of this candle. I mean, if you're trying to trade this is really, really difficult to try to trade. I mean, if you're trying to short on here, it's really, really hard. Again, I don't use 1 minute. I think there's too much noise. But if you like to trade off in 1 minute, obviously, I would think this would give you quite a bit of help. Just trying to see if it'll work for you, Chris. Yeah, I understand. Listen, I know. I've been doing this a long time. You know how many things I've tried? I've tried so many of these things. All right, so I'm gonna bug out here for a Saturday. Everybody have a great weekend. I will see everybody. Hopefully see some folks back in the room on Monday or on the alert service. And thanks very much. I appreciate all of your attendance. A lot of questions, a lot of good questions. And again, I hope you have a great weekend. I hope to see some folks in the room in the alert service next week. And again, this software is a great piece of software. I mean, it really is. This changed my trading dramatically as far as my win rates were concerned because of the fact that I could determine whether institutions were in the trades or not. All right, everybody, have a great Saturday.